Hello, this is Ron Henderson, President and Broker, Multi-Real Estate Services in Los Angeles, and this is a mortgage interest rate update on May 8th, 2013. Let's take a look at a chart of the 10-year Treasury. Its direction most closely correlates with the 30-year mortgage rates. You can see visually over the past couple months how the interest rates were trending downward, but then over the past couple days, they jumped up pretty hard. That was because last Friday there was an economic report released that reflected that the unemployment level was stronger than what was previously predicted. I've indicated numerous times interest rates go up faster than they come down. This is a perfect indication of that. We can see it jumped right up to the 50-day moving average. And today there was a 10-year note auction. Rates usually go up right around the auction period, so hopefully we'll find some stability in the interest rates and they'll trickle back down. You can see in this chart of the past year and a half, on a proportionate basis, the rates are still great, but they did pop up from these recent lows. It's definitely an excellent time to buy a property or to refinance. You can see in this chart that the payment right now for a house is half of what it was at the peak. And that's a combination because of the lower interest rates and because the valuations are lower. Now, buyers have a lot more skin in the game compared to the recent peak. Now, that's due to a combination of the tighter underwriting guidelines. A lot of the loan product that existed back in 2006 doesn't exist anymore, but also because sellers are leaning more towards buyers that come in with much stronger purchase terms because of the tight inventory, and sellers can pick and choose in the multiple offer scenarios. The percentage of all cash buyers jumped up to 30% from 11% back in 2006, and the quantity with 20% or higher in a down payment jumped up to over 54% from the 43%. Most of the high loan-to-value loans are going FHA. PMI companies are just now starting to trickle back into the market. We used to do a lot of, say, 80-10-10 loans, 80% first, 10% second, but the second trust deeds, they're just starting to come back also. There will be limitations on what type of loan products are going to be available in the future because of the new Dodd-Frank regulations kicking in January of 2014. It's funny, I get calls from clients and they say, "Hey Ron, I see on TV the interest rates came down." The reality is, by the time it hits the media, it's obsolete information. Before we lock a loan or let it float, it's best that we analyze from a technical basis what's going on with the interest rates, what's going on in the secondary money market for mortgage-backed securities, and that way at least we stand a chance on getting the best rate for that time frame. If you have any specific questions, always feel free in contacting me through my website, mres.com, or the email address or phone number shown below. Till next time, take care.